Welcome, this is Chris Ball with Financial Muscle Planning. I get so many requests on getting an example of a financial plan, and I wanted to take a few moments to go over one with you I did in my software. I use a product called Right Capital. This is what I use for clients. This is a very powerful software. It gives me so much ability as a planner to lay out different options and scenarios for clients. But I want to take some time and give you an overview of what goes into a financial plan and give you food for thought. And then you can decide how you want to manage it. You may be someone who really enjoys managing your own money and dealing with all of these different elements. You may be someone that wants to come to a planner like myself and say, hey, Chris, I would really like you to set up a plan for me, give me the information I need, and then I'll execute it. And you may be the type that wants more involvement from your planner and you want them to manage your money, manage your investments. There's advantages to all of the things. It really comes down to you. But let's take a look at what goes into a good, solid financial plan. The overwhelming message I use with my clients is that we all have very individual needs when it comes to money, and we have to take those things into consideration. However, good financial planning involves the same elements for most of us, and it depends on our circumstances. You can see up here the things we're going to look at: investment, retirement, insurance, education. A lot of these things depend on our family situation. And I kept this one rather simple, but if, let's say you have 3 children and you want to plan for education, obviously we have to do some work there. We have to think about what are going to be the right vehicles for you to save your money and plan for your children's education. So let's take a look here. I set up a family here. This is the Navin R. Johnson family. If you get the movie reference, you get extra points. And if you don't, you need to look it up and see the movie. It's a comedy classic. But let's say we have Navin and Marie here. Navin is 48 years old, and I want to plan until Navin, we're going to make an estimate that Navin's going to live till 90. So we want to plan accordingly. And he's, as of this recording, he's 48. Ironically born on January 1st, 1970. And what a coincidence. So is Marie. So obviously I kept it simple here, but just want to show you. So Navin and his wife Marie, they're both 48. We're going to plan until that they're going to live till 90. We hope it's longer, but that's a good number usually based on life expectancy. Most women have the advantage. They end up living longer. So there's some unique needs sometimes we need to look at with that. But starting out for Navin and Marie, we want to figure out what their net worth is. What are they currently worth? So that is going to be taking their assets, the things they own, the money they have, and we're going to subtract that from their liabilities. Liabilities may be debt. I made it simple here. As you can see, I just said that Navin and Marie, they're in their 40s now. Let's say they've probably paid off any student loans, so they just have a mortgage left. And they have some credit card debt, but that would be a liability. So when I take the assets minus the liabilities, I have a net worth. So right now, they have a $200,000 home they just bought. In fact, I said that they just bought it this year, 2018. And they just took out a $200,000 mortgage. So yes, they own a $200,000 home, but they also owe the bank $200,000. So that would equal zero, no net worth there. So their money that they have in the bank is what really drives their net worth. So they have $50,000 in checking, $10,000 in savings. Let's say they owe American Express $3,000. So here's their net worth, $57,000. Net worth is the number that is going to drive everything we do going forward. A lot of people look at someone, let's say I own $1 million home and I drive a $100,000 car. Does that mean I'm a millionaire? Not if I owe the bank $1 million on the mortgage and I owe the car company $100,000 on my car loan. That means my net worth is zero if I have no money in the bank. So remember that. Net worth is what we're driving forward. And then, as I'm building out for Navin and Marie, I would want to know what their goals are. And what's cool here Just to give you some idea, these are all the goals you might think about. You have kids, you want to plan for college. Perhaps you're still thinking about some college in the future. You want to save up for a car. You want to go on a fancy vacation, a wedding. Let's say you want to leave a legacy for someone. I have colleagues and clients that have loved ones that have disabilities, and they wanted to leave a legacy for them or provide some money to help take care of them. Maybe when you're 50, 55 years old, you want to relocate. We can plan for all of that. And look, we're going to make some very educated guesses on things, but we can plan for it. So here's some simple goals. Let's say Nathan and Marie want to retire when they're in their 70s. They want to, right now we're guessing they're going to maintain a similar lifestyle. They're going to live on about $5,000 a month. We're going to guess in retirement that they're going to have some health costs. And again, this is something we can plan for. We can think about insurance. We can think about the various options when you get into retirement age. And then long-term care. This is one some people don't think about. And the numbers nowadays estimate 60 to 70% of Americans need some kind of long-term care when they get over the age of 65, whether that's a nursing home or an in-home care. The expense on that adds up very rapidly, and it's unfortunately something a lot of people don't plan for, and it can be very costly. So we want to think about all the goals we have. Goals are going to drive your plan. Your goals are very individual. You may have a goal of retiring at 50 and moving to an island somewhere. Other people may love their job. They envision never retiring and want to continue working, but maybe live somewhere they've always wanted to. So again, goals come with your imagination and your desire. So as a couple here, Nathan and Marie would want to think about their future and what they want to plan for. Of course, your income is critical. That's going to drive everything again. We're hoping as you grow in your career and as you grow as a person, you're increasing your salary as we go along. Unfortunately, that's not always a reality these days. So I just put in some basics here. Let's say Nathan, he's got a good paying job. He makes $100,000 a year. Marie has a nice job too. She makes $50,000 a year. And then we're going to, in the plan, look at Social Security. And here I said, we're going to hope that Nathan and Marie can wait till they're 70 to take Social Security. Some people start at 62. Some people take it at 66. Some people take it at 70. There's different pros and cons. Most planners will tell you and show you that the numbers indicate you're better off waiting to 70, but not everyone has those circumstances. So again, hopefully you're not close to having to make that decision, but if you are, that's something we can plan for. And then there's other incomes you can take into account as well. It's not just your salary. Think about if you have a side job or if you're self-employed, you get child support or alimony, pensions, annuities, inheritance. Those are things you want to consider and make sure you have them in your plan. And then we talked about savings as far as money, but let's look at other savings options. Here I said that Nathan is, let's say he's self-employed, so he's got a SEP IRA. And a lot of these things I don't expect you to know the details on. I just want to show you right now what goes into the plan. And these are all elements you can learn about in the future, whether it's from me, from a planner, from someone else. But I want to make sure you understand that these are going to be critical to the plan. So this is going to be part of our investment strategy. So I may take advantage of retirement accounts at work, like a 401k, a 403b, or a 457 if I'm a government employee. Traditional IRA, a Roth IRA. You need to know about Roth IRAs if you don't. A SEP IRA or a simple IRA, that would be if I own a company or I'm self-employed. I could take advantage of these. HSA is a health savings account. That's becoming more and more of a critical tool. And then various pensions and other income. So again, part of our savings plan, that's got to go into the picture. And then finally, our expenses. We make some estimates. pre-retirement living expenses. So I want to know what I'm living on right now. So we guessed Naven and Marie are living on $5,000 a month. And then taxes, you can set up the taxes you have for your local taxes. The tax law, my software is great. I really like the Right Capital because I can look at, here's the tax laws that were just implemented by the government. Now there's discussion, it may be eliminated in 2025 and new laws put into place. And then we can also look at if the current laws stay in place beyond that point. So some pretty cool things we can do. So that's the inputs that we would put in. And then it's all going to tie into these items up here. And this is, again, these are the elements that go into our plan. So let's just show you here the dashboard. Again, as I talked about, it's going to show Naven and Marie's net worth, their liquidity, how much cash they have available. Liquidity is what's, easily available to us, liquid money. Budget, there's a budgeting tool you can put in. Debt management. Naven and Marie have that fresh new mortgage in 2018. How can we address that? Can we look at scenarios that may help them and benefit them if we pay it off sooner? Student loans. This is a big one for a lot of my clients. How do they manage the student loans? What goes into that? There's a component there, so we need to look at that. All of that, again, goes into that net worth. And then investments. How do Naven and Marie have their assets set up? These are all classes of investments. So let's say in there, we said they have a Roth IRA and we have a 401k. What do they have their money going into? Are they invested all in the U.S. markets? Do they have some international, emerging? You can see this is kind of a typical asset allocation based on trying to build a lot of diversification into our investment strategy. And again, this is a quick overview. I could spend hours talking about this, but this is the type of things you need to think about. What am I going to invest in? What's the best way to construct my portfolio? This, I will tell you, I like because we have diversification. And as you get into different areas, you can see there's certain types of equity we can get, some sectors. You see here real estate, energy, technology. It can be very overwhelming for a lot of people to think about this stuff. And that's one of the big things I love educating people on. So, always feel free to look at my website and be sure to, ask me on Facebook, email, whatever. You can look at these type of things. And when I work with a client, this is the things we really dive deep on. So investment's important. Retirement analysis. Everything we talk about here, investment, insurance, education, tax, estate, we're planning for now, but we're really planning for the future as well. And if you think retirement is too far off, I'm going to tell you that you're probably wrong on that. I wish I would have started planning and saving for my retirement when I started working my first job when I was 18 years old, my first real full-time job. If I had done that at that time, I would be so much better off. And I'm grateful that over the years I learned about this stuff and it became a real passion for me that I wanted to do professionally. But the reality is if you start early, you build assets, that money gets to work for you and you start to grow. But this is cool because this shows us where we're at now, right now, the way Naven and Marie have things set up. They would have a really good success opportunity. So this is called a Monte Carlo simulation. So this does hundreds of calculations and different scenarios and tests the plan out for success. So it takes into consideration if we have a market drop, if Social Security dries up, if all these, all the what ifs people worry about, Monte Carlo simulations take this into consideration. And again, we're looking at things that go into a retirement plan like Social Security. We can build a strategy there. If you're getting to the point where you're thinking about Social Security or it's coming up in the near future, I like this here. There's 700 different filing strategies we could think about. Now, you don't need to dive that deep, but I'm just telling you, there's different things that we can look at, and this is what good planning does. It takes into consideration your circumstances and how you can maximize your benefits. Medicare, you need to think about that when you turn 65 and file for Medicare. How's your health? What do we need to look at? Do we want to look at getting more insurance for you at that time if you've had some conditions that have affected you? Very important. Cash flows. We can build out estimated cash flows all the way till Navin and Marie are 90. So you can see here just an immense amount of data. This is what good planning does for you. This is what goes into a good financial plan. We're looking at now, we're looking at the future. I want you to enjoy your life now, but I want you to have a good future as well. And think about things like life insurance. Think about disability insurance, long-term care insurance, like we talked about. Insurance goes far beyond your car and your homeowner's insurance. Once you start having a family, you have loved ones, you want to protect them if something happens to you. What happens if your spouse died? And would you be able to survive? Those are things you have to think about. People avoid it like the plague, and I get it. None of us like to think about these things, but you have to think about insurance when you have loved ones. And you have to protect yourself. You have to protect your loved ones. And it can be one of the most loving things you do. Is if you're, let's say, thinking of some people I know, let's say you're 30 years old, you have 3 children. Mom is a stay-at-home mom. Not everybody can afford to do that these days, but let's say they're fortunate enough to do that. I know, again, I have clients that are doing it. But what if dad, who's the breadwinner, passes away tomorrow? It's horrible to think about, but it happens. Would mom and the kids be able to survive, or would they be destitute? If you have a provision of some term life insurance in place, it's probably not very costly for a 30-year-old man who's healthy, and you could leave a loving legacy to them if something were to happen to you. So this is what we have to think about. Disability. What if I'm disabled? I get struck with an injury or something that's going to affect my ability to earn an income for a while. Do I have disability insurance? I talked about long-term care insurance for elderly. Here's the number. Health and Human Services indicates that 70% of people turning age 65 can expect to use some form of long-term care. That number goes up constantly. I remember reading it being 60% not long ago. The good news is we're living longer. People are living longer. The bad news is healthcare when you're older is a miserable and expensive thing to deal with. So it may be a very loving thing. Maybe you see a parent or a grandparent going through this right now. So insurance planning is critical for you, your loved ones, your family. Education, again, there's so much that goes into education these days. Education costs have gone up so rapidly. It's ridiculous. Quite frankly, the numbers since 1980 are just absolutely staggering. So for yourself or your children, if you're trying to think about college, this is all, again, something very critical. It works very much in line with investment strategy, because let's say you have a newborn child and we're thinking 18 years from now, you want to send them to college. We need to think about where we want to put the money, what we want to do, what the goal is, and build from there. And each state is different. Each state in the United States has slightly different offerings and laws around what's available. Some states have better things than others, quite frankly, to offer. So important to know that too. So that goes into a good strategy with education. Taxes. A lot of people's tax strategy is, I hope I get a return at the end of the year from the government. We have to plan for taxes now and in the future. Taxes are something you will deal with from the very first paycheck you receive till your last breath. The government will be involved in your life getting their taxes. We can build strategies. We can look at ways of building efficiency. So many of us think, we hear about it on the news, some wealthy people that look at taking advantage of certain tax laws or businesses. We may not have as much available to us depending on our income level, but I tell you what, you need to have a tax plan in place, especially when you get older, when you look at distributions. So as I get older, let's say I get into my 60s and my 70s, and let's say age 70 and a half, when I have to start taking money out of some of my retirement accounts, I want to look at building a tax strategy. So see here, there's a lot of things we can do to maximize your tax burden when you get older. The sweet spot typically, especially, is between, let's say, 62 and 70. People start thinking about Social Security, how to draw down their money. There's a real art and a science to it. So tax planning is always going to be part of a good financial plan. Finally, I did talk about insurance, but estate planning. You want to protect your family. You want to control what happens to your money when you're gone. You have to plan for it. This is another item nobody likes to deal with. It's very terrible to think about, but we have a horrible track record as the human race when it comes to immortality. We're 0 for several billion. And I'm not trying to make a joke light of it, but it's true. It's part of being a human being. So we have to plan for an estate. Unfortunately, well over half of Americans have none of this in place. You have to have a will, power of attorney, minimum in place, healthcare proxy. Living wills and living trusts are the greater your portfolio is and the more assets you get through life, the more important it is for your estate plan. Too many people think this is only for wealthy people. They think about leaving a monster trust or some foundation in place with their legacy. We all need an estate plan, a will. A will tells what you want your assets to do when you're gone. You have to have one. So estate planning is critical. And you can see here what we can do. We can look at setting up an estate, setting up a trust, building strategies. We want to leave a legacy, whether it may be to our heirs, it may be to other loved ones, a charity. We don't want it going to courts. We don't want it going to companies. We want our money to live beyond us and leave a legacy. So important part of estate planning, and you can see all of these are just critical. So I hope this gives you a good overview of a good financial plan example. You see what goes into it. If you need help, you want to work with a professional, I'd love to work with you. If not, I hope I've given you enough information so you can see what you need to do to set it up. But this is all critical. Make sure you take action on this. Like I mentioned, I wish I would have started sooner. It's why I got into this profession, because I'm passionate about helping people and I want them to win with their money. The greatest thing is when you are able to see someone who's in their 60s and 70s, retired, and they're able to do whatever they want because they have the assets, they have money, and their family's taken care of, and they've enjoyed life and had the peace of mind that came with doing a financial plan. So all the best, and if you need help, you need some assistance, you want to find out more about working with a professional, please contact me. I'd love to talk to you.